All right. Good morning, everybody. Hope you're having yourselves a fantastic Tuesday morning. Everything appears to be working reasonably well here today. I might have jinxed it just there and now, but hopefully a smooth operations day here. And then we can, yeah, keep stacking them up and then going from there. Just from like a personal level here. I do have a hard out here today. I gotta do a bit of traveling to get to a rehearsal dinner. Like just some traveling on the tube. So bear with me here, guys, right? If I do have to cut things off a little bit earlier here today, but should be a still smooth, simple, kind of normal trading day. And yeah, hopefully we get some reasonable action. A couple things for us to note here right before we start the session. So first things first, right? We've got data at 9:45 and then data again here at 10 a.m. So I do expect it to probably be a little bit of a slower market open, or at least it's going to be probably pretty challenging for me to get an entry within the first sort of 15 minutes of the day. And then maybe it opens up like a secondary window, right, where I'm able to finally execute an idea, and hopefully something goes from there. Besides that, right, yesterday, pretty strong trading day. We controlled the variables we can control well. We didn't force any trades. We didn't overtrade, and kind of just let our math, right, work in our direction. And that was really satisfying and yeah, pretty good place to be. So looking for a continuation of that here today. I guess obviously the dream scenario is a one and done. Get one nice trade, enjoy that price action, and then go live our lives. I think just an important reminder, right? I was having this discussion with someone yesterday, but we want to optimize our decisions, not our time, right? Your job as a trader isn't to spend all day trading. It isn't to place 1,000 trades in the market. That's not what's going to make you better. Your job as a trader is to study the market, study your reactions to the market, and try to see, right, where your reactions diverge from what the market is giving you and figure out how you can change that, right? How can I behave so that I don't have those out of body experiences or those impulsive trades or whatever? And the more accountability you take towards that, generally, right, the better things are going to go. So that's very important for me, right? For that to be crystal clear. Please do not skip the work that's actually going to make you a profitable trader and keep the main thing, right? The main thing isn't trading. Trading is the data we collect along the way. And so focus, right, on the variables you can control. And just as a reminder, right, showing up is not enough. This is too competitive of a game to just wing it, hope you get lucky and that things are going to work out for you. That is not the reality. I'm not going to sugarcoat that for anyone. And if you do want to be successful, you really need to control those variables exceptionally well. All right, so let's start mapping things out here a little bit this morning and then figure it out from there. Hopefully, trading views a little bit faster here today. But again, I think just that's just me being on my hotspot, right, on my phone. So yesterday, green candle, decreasing volume, right? And then today is a gap down. So only one out of those three elements are telling us that bulls are in control, right? Which is that green candle close. So it's a 1 for 3 here to the upside. From a, I guess, like setup perspective, right? We'd be targeting 67.30, and then we already have it mapped out from yesterday's levels. So 67.30, 67.40, 67.50. And then to the downside here, right, we're targeting 66.90 and then beyond. I don't know, 66.40, 66.30, fine, yada, yada, yada. Again, I'm not sure if I necessarily expect a tremendous amount of volatility here today, but let's see. Let's see if it shows up. All right, NQ. So yesterday, green candle, right? Decreasing volume. And then today it's technically gapping up, right? It's a green pre-market. So yesterday's candle and so far today's price action is telling me the same story. So it's a 2 out of 3 to the upside without volume. That's the missing ingredient, right? To have quote unquote trending price action. So we'd like to see that volume return here in a big way. Same thing though as yesterday, right? Okay, pre-market high or yesterday's high, 24,974-ish. So initial target here, right? 25,000. That doesn't need to change very much. And then we're going past all-time highs to the downside here, 24/7, right? 708 appears to be the low, maybe a little bit higher, but very much the same narrative there. So I don't need to change these levels particularly much. Okay, CL. So yesterday, red candle, right? Increasing outlier volume. And then this morning so far, gapping down. So all three of those things are telling me that there's trending price action here to the downside, right? So it's a 3 for 3 to the downside. And that means that I do not have a bullish scenario here today. I've got trending price action here lower, so I'm not going to look for counter trend opportunity, and I would only be interested in a trend continuation narrative. So from there, right, our initial target is going to be $62. And again, we have to just be a little bit aware of the exchange limits here, right, to make sure that we're not getting stuck in a limit down situation. And so that would push us for a move towards, let's say, $60, right? 59.88. So we'll round that up and we'll play this down towards 60. So 61.50, 61, 60, 50, 60. So not too shabby. And we'll see if it's reasonable from there. So now we'll go check some of just these leading names very quickly. Okay, Apple, pretty pathetic range there, right? Red candle, decreasing volume, gap down. So 2 out of 3 to the downside, right? But not exactly enthusiastic. Tesla, if it loads. Oh, come on, hotspot. Let's try and, oh, there it is. Okay, same thing, 2 out of 3 to the downside. Without Microsoft. Okay, green candle, increasing volume, and then gap down. So 2 out of 3 to the upside with volume. Okay, NVIDIA. Oh, this is ridiculous. There it goes. All right. Green candle, increasing outlier volume, and then technically gapping up. So again, we'll call this a 3 for 3 to the upside. AMD. Oh, this might drive me insane again here today. I feel like I've spent more time trying to see these tickers change over than I've had time to do prep, right? Kind of ridiculous. There it is. All right. Green candle, increasing volume, gap down. I would call this though a weak 2 out of 3 to the upside with volume, and it's weak because of the candle shape. Okay, Meta. Again, if it loads, if it's like this again, right, I'll just stick to one ticker, one time frame, and effectively stay there. This is ridiculous. Okay, We're going to call that an inside bar. That doesn't need to change. And then let's just check Google. How's everyone feeling this morning? Everyone feeling sharp? Everyone feeling good? Oh, come on, Google. Okay, red candle, increasing volume gap down, so 3 for 3 to the downside. So, kind of a mixed story, right, across our leading names. Some names are showing us strength, some names are showing us weakness. Um, Markets look relatively indecisive, right? We don't necessarily have any trending PA on an index-based level. So let's see if that momentum, right, can return in a big way. If we can establish a little bit of juice or a little bit of yeah, like some momentum, some nice volume, right? And then go from there. Like I said, I'm probably expecting it to be a little bit of a slower open because we've got data at 9:45. So it's going to be very challenging for me to get trades prior to that data dropping. But hopefully from there, right, we kind of get an opened up window or a easier path higher or lower, and we can take advantage of just what hopefully will appear to be strong PA. From a like trading perspective, ES and NQ are very similar here this morning. There's a very minimal difference between the two, but maybe a little bit more um, like residual strength is kind of hanging out in this NQ. So I'll keep probably this as my primary focus here this morning. Now, NQ is my primary focus pretty much every morning, but today I've got a little bit of a bigger excuse for that to be the case. Yeah, so the link is always posted in the live stream link tab of the Discord. It's the same place every single time. So should not be too much of a surprise. But yeah, good to hear everyone's doing well. Everyone's feeling hopefully sharp and refreshed and recharged a little bit here. I've had a weird sleep schedule the last few days, but we'll be fine. It feels so strange to be starting work at like 2:30 in the afternoon. It feels very, very broken. And I never know what to do with myself in between those time frames. Yeah, so Indra, the link to join the Discord was emailed to you when you joined. So please go from there. What do you mean, are we dead, Earl? What does that mean? The wedding's in a city called Reading, about an hour train from London, something like that. Today I've got, yeah, like a rehearsal dinner with all the groomsmen and the family. Oh, kind of a pain in the ass, but it is what it is. I'm not sure Aaron would be too happy hearing me say that, but tough shit. Oh, very cool. Yeah. All right. So we got, I don't know, 40 seconds here till markets open. Let's see how the day shapes up. I'm just gonna start it off on the 3 mid time frame. And yeah, let's see how it comes together here and what markets have in store for us here today. Hopefully, right, a nice trend day. All right, 15 seconds. Any day now. right, there we go. Let's mark it open. Couple things we're going to be looking for here right off the bat, right? How is the volume? So is the volume larger than yesterday's open? And then the secondary thing we want to look at, right, is today's range larger than yesterday's opening range, right? Yesterday's opening range was not particularly impressive. So let's see if today we can get a little bit bigger than that. If we're, I mean, it looks like we should be on pace too, but if we can't exceed 37 and a quarter points, that would be concerning, I would say, right? Or maybe an indication that it's just not going to be a very big range day here again. So it'll be a lot of the same type of stuff we saw there yesterday, right? The tighter the range or the lower the volume, the more that we're going to want to participate in basically the fake out entries, right? We're going to want to see the opposite side of our trade fail first. And then once it has failed, right, hopefully we can then jump in, get a smooth move, and have ourselves a little bit of joy. One thing that I need you guys to focus on here a little bit today, I've been uh, dealing with a lot of these types of questions, I guess, this week and last week. But the idea here, guys, right, is that if we get confirmation on a trade, our entry does not need to be immediately after confirmation, right? It can be 2 candles later. It could be 5 candles later. Hell, it could even be 30 candles later post confirmation. All we care about, right, is once our thesis has been established or our trending move has been established or our breakout thesis has been established, we want to basically understand what invalidates that move. If the move hasn't been invalidated, then our confirmation continues to hold and we don't need to look for a new confirmation. If our idea has been invalidated, then we need to reset and go from there. There are two ways to invalidate confirmations, right? You get a break, close, and hold above the confirmation high, right? If you're bearish, so we get a breakout above and a hold above that level. Or if we're bullish, right, it's a breakdown to the downside that holds under the confirmation low. Or alternatively, right, we see a volume profile that is larger than what we got on our confirmation. If we don't get either one of those things, then the confirmation candle continues to be in play. And I need you guys to be able to understand that concept well. Because if it's like the slower the market is, right, the slower things are, the longer things are going to take. And that's just going to be the reality, right? So really need everyone to understand that concept. It's going to be exceptionally important for us when we're trading, especially when we're dealing with more kind of like fake out type conditions, and just understanding that as long as our thesis is still valid, we don't need to keep looking for a new confirmation each candle, right? So please, guys, let's make sure we keep that So, Brian, no, we should not always be placing market orders. That is incorrect. I use limit orders for my entry. If you would like more detail on my specific entry technique, please review the videos inside the Discord. They break that down in detail. I only use market orders when I am exiting my position and I'm looking to get out. I'm not really a market order guy. I believe in limit orders. I believe in knowing what price I'm going to execute at, and I believe in choosing a specific entry price. That's why we set the reference price. When I draw that blue line on my charts, that's the limit price I am putting into my order window, and I'm waiting to get a better price than what that blue line tells me. So no, I do not believe in using market orders for entry. I do not want to chase entries. That is a very expensive way to trade, and you're always going to get worse fills. So if you want to actually be successful here, you need to be prepared to enter positions when we start to map out our trades or draw our fibs or draw our reference price. That is the time to start to fill in your order window and be prepared. And filling in your order window doesn't mean you're going to click submit. but it at least sets you up so that you don't have to rush. Using a market order in that situation is generally a lazy way to solve that problem, and it ensures that you're unfamiliar with how much risk you're actually taking, which fundamentally betrays the core concepts that we try to focus on and preach here. So the only way that you can actually get executed at the price that you want or better is to use limit orders. And yeah, that should hopefully be very obvious. Okay, so we have a pretty good chance for the second candle of the day to be increasing volume. It's not a particularly impressive opening candle, right? The volume on that open was quite a bit less than what we saw there yesterday, but maybe this won't go increasing now. Looked like for a second it absolutely was going to. So we have a setup, but no confirmation here yet, right? So if this ends up being a trade, this would be a multi-candle opportunity. We did not get confirmation there on the second bar of the day. It broke, closed, and held under the opening range, but it did not do so on increasing and outlier volume. So for now, I'm basically not looking at anything here. I've got no reason to trade this opportunity. Let's see what the old ES is doing. Okay, still decreasing volume, so that's not going to change too much. So we're just going to be focusing here on NQ for now. The other thing, guys, right, had a lot of questions about this yesterday as well, which I'm, again, a little bit confused by. But everyone has been asking me, like, about secret indicators that I use or, like, uh, tools or whatever. I don't use anything that is super complicated. None of the stuff that I have on my screen here, or I don't have a separate screen with like a different set of indicators or a different set of tools. I watch price action and volume, and they're just the default indicators, right? Nothing special, no unique settings, nothing complicated. So again, please don't look for things that aren't there. You're going to confuse yourself. The reality, right, is that we need to just focus on the basics. We want to study price action. We want to study volume. We don't need indicators to do that. We just need to use our eyes and a little bit of common sense. And I don't have any like secret sauce that I am hiding. All the indicators that I use, again, just use the default settings. If you want to use my charts, the link for those is in the FAQ section of the Discord, and that'll give you the exact same chart layout that I am using, the exact same view that I am using, and we do not need to then complicate that process further. So again, guys, please um, don't look for things that aren't there. It's not that complicated, right? Where we keep things very simple, very basic here, and we just focus on the variables we can control. I just use the normal Fibonacci tool. I only use it to help me visualize my risk reward ratio. I don't know, Chris. The last time I traded CL off the top of my head, if you go through my trading journal, you would be able to find that, right? So last trade I have in my journal here for CL would have been September 10th by the looks of it, or September 9th. Yeah, I would say 85% of my trades are on NQ. So again, guys, please don't overthink things. All right, so for now, I mean, this would be the potential setup. Problem with this, right, is we're 6 minutes away from that market data. This technically an increasing and outlier volume standard. There's just not a ton of space left in this move, right, to be able to get a decent amount to follow through. And if this thing fakes out, that also might create a scenario where just like risk reward wise, it's going to be very, very challenging. So I do want to be a little bit patient with this. I don't need to rush an entry or to force an entry. I want to see what the market has in store first. Basically, where's that enthusiasm And for now, I'm not looking for an entry here yet. I still want to see that fake out. I still want to see bulls fail first. That plan has not changed. So again, please be patient, right? Even though this is increasing volume, if we zoom out, right, it's not that impressive relative to yesterday's open, right? Yesterday's open was about 30% more volume. Now we've had a little bit more of a consistent profile, candles 2 and 3, but that still isn't a very good indication of trending price action or as if that momentum is in store. So we've done a pretty good job here avoiding what probably would have been a losing trade had we been hyper aggressive. But nothing about what we've seen here from this price action is indicating that that would have been the right move. So far we've had a good read and a good feel here for how this market is moving. And hopefully we now can start to establish some of those fake outs or those bullish failures. And then, yeah, we can ride this there to the downside. Again, I don't want to put too much stock into this price action prior to that 945 data. It's red folder data, right, with PMI. And so that could be a little bit of an interesting one here as things kind of creep in. So we got 4 minutes till that happens. I don't think I have enough time to be able to get that folder through that I'm looking for anyway. So we're going to have to wait this thing out just for a few minutes. So again, guys, with YouTube, right, you want to make sure that your live button is clicked and that on your settings, right, your playback speed is hit to 2x. This way, if you have any buffering or you have anything like any delay, that when your stream kicks back up, it gets you back to real time. The latency on YouTube's end is 3 seconds. There is nothing that I can do that will speed that up. So yeah, please, guys, right? That's the move. And yeah, we've got PMI at 9:45, right, or 6:45 Pacific, and then we have jobs data at 10 a.m. So like we talked about at the very start of today's session, we've got data here at 9:45 and 10. So that's why we're expecting it to be a little bit of a slower start because the market has to get through a lot of slog, right, before we can effectively get a smooth bit of price action without any interruptions. So again, we have about 90 seconds here. Once that clears, right, we'll have a 15-minute window where we for sure could get some tradable moves. Like our trades yesterday were 3 minutes long, 5 minutes long, right, 2 minutes long. Like they weren't exactly like all day holders. So if that's the case, right, that's going to give us plenty of time here. But I don't think we've necessarily seen that bullish failure here. So being patient, being deliberate, very much the right move so far this AM. Okay, 18 seconds. Let's see. Frickin' trading view. So, uh, John, like with using market orders, when I want to get out of a trade, I want to get out basically when I want to get out, right? So a market order can help me accomplish that because its objective is to fill me at the first possible price, not necessarily the best possible price. If I'm going to be using a market order to exit my trade, I'm going to be looking to exit right as my P&L is increasing. So as the trade is moving in my direction, that would be the opportunity then for me to exit, right? So if I'm going to be using a market order, if I'm short, I want to be clicking the X on my screen or clicking submit on my button as price is going down. If I'm bullish, right, I want to be doing that as price is going up. So never counter whatever the general market is, always the same story or the same narrative. So in the same direction, right? Again, all those details and techniques are explained in a lot more detail inside the Discord. There are live execution trades that I've done, right? Where you can see my order window, where you can see all that fun stuff. So it's going to be there. But your objective, guys, as a trader is getting out at the price that you think you're getting out at and getting in at the price that you think you're getting in at, right? That is the variable you need to control. Market orders introduce more chaos, right? They introduce more unfamiliarity, right? Or a little bit more randomness. So if you don't think you're going to get the fill at the price you want, don't use a market order, right? It is just that simple. Again, guys, like too many of us are overthinking our execution. Like there is no perfect way of doing it. It is the way that you can do it that will help you avoid making mistakes, right? That is literally all it is. So how can you enter your trades or exit your trades without making mistakes or without getting fills that are unexpected? So again, like using a limit order to enter your trades or a market order to enter your trades, right? You can effectively get the same entry price. I just think that it's easier to do with limit prices, or I like to make sure that I don't have a chance to exceed my max risk. It's the same thing with exits, right? You can accomplish the same thing. So it's not going to be the difference between you being profitable or not. So like we don't need to put all our energy into this because it is, yeah, it doesn't make a difference. Okay, so we have a little bit of a reversal setup here, right? Fake out to the downside would be our setup, right? So failed move lower. This ends up ultimately being our confirmation candle, right? That one that just closed. And closed right at 800, which is a little bit interesting. And then same thing, right? I want to see the opposite side of my trade fail first. So let's see now bears fail again, right? Either a little fake out, right? Under or confirmation candle low, something along those lines. So let's see, we got a little bit of time here to be patient. So right now, right, the 782 isn't going to be my stop loss price, right? If I'm waiting for that fake out technique, that's not there. So this is only right now in play so that I can set it up if we do get that fake out easier. And if you just watch my screen, right, there is still no blue reference price line or no reference price. So I haven't even set up an order window here yet. Okay, there's our first attempt here at this possible fake out. Let's see if it happens. So far, I would not say it's particularly behaving like a fake out. And so we need to see it basically get over that red line again, right? So 782. And then that would make my stop loss to be 65. So 82 to 65, right, would ensure that I'm taking a one contract play, but I don't think that this is going to set up for me in that way. Right? Like price hasn't really gotten back up above that previous low. So generally a fake out, right, pierces under or above our confirmation, and then it should be like a magnet or a trampoline bouncing back up above that. We haven't really had that reaction, right? It has been kind of like stairs up and then rejecting off of that blue line. So hard to call this a fake out. So again, no real interest in chasing after this here yet. So just this week, Deb, I'm on a travel setup. My Wi-Fi at my hotel is a lot worse than I expected, and so I am hotspotting off of my phone. Because of that, right, my internet connection isn't as strong as it could be, and so I'm only able to stream to one source. Again, I mentioned this in the Discord and in the videos there yesterday. So it's just a temporary setup here while I'm on the road. And so not exactly any trending PA here yet to start the session, right? It's been kind of a bouncy start so far. And at the moment, we have no active setups that we're looking for confirmation for. So for now, we're just chilling. We've got 7 minutes, right, till market data drops. So again, probably expecting a setup to occur maybe at that point. For now, I don't have anything, so there's nothing for me to trade or even to set up. So I'm sitting on hands for now. What time frame are you on? Because on the 5 minute 74, on the 3 min, right, it's like 39. So it kind of just looks like you're on a different time frame. So you're telling your settings, right, that you want to look at the initial 5 minutes, not the opening candle. If you go into your DTR ORB indicator, you want your opening range time to be set to 9:31. So what that does, right, is it'll ensure that it'll take or calculate based off of the first candle of the day. If in that setting you have it set as 9:35, then it's going to look at the first 5 minutes and it's not going to look at it from a time frame to time frame basis. It's good volume on this candle. It's just a shame that we've got data in I don't know, it'll be a couple minutes, right? It'll be in 3 minutes, so not enough time to execute this trade. So again, we're gonna wait, right? We're gonna wait. Okay, I mean that's setting up potentially as a bit of a reversal there. But again, guys, even if this thing closes as a green candle, I'm not going to be looking to place a trade here in the next 3 minutes, right? I need to see that 10 a.m. data clear and just make sure that I'm not getting stuck in like an algo reaction. The fact that we're getting largest volume of the day at 9:56 is pretty suspicious, right? It's very rare that you get larger volume than the open 25, 30 minutes into the trading day, right? So want to be a little bit patient here. That's a bit of a warning sign. Or it's like not normal, right? And this might be maybe a better setup for us on the 5 min time frame here. We got 2 minutes. This might give me that increasing outlier volume, at which point, right, we can maybe use the news data drop at 10 a.m. to get our very discounted entry. Let's see if this gives us confirmation with volume first. Okay, minute 15. Very good chance that this will go increasing volume. Very limited. It doesn't have very much more to go, so for sure looks like it should happen. And let's see, right? If this thing could close, I mean, really as close to 800 as possible, that would be the ultimate sign of strength. Now, I don't think we're going to get 23 points of movement in 40 seconds. Could happen. Hopefully, I can reverse jinx it. But yeah, looking pretty good here so far. Bullish engulfing candle, bullish engulfing on volume. Let's see if we can close with that strength here in the next 30. And so this now, right, is a setup to the upside. It's an ORB fake out lower with a reversal candle. And so let's see how this 10 a.m. data behaves. So by default, right, targeting that upper red line, stop loss would be at low of day. And we are not going to be hyper aggressive here yet, right? The 780 to 720 stop loss is a bit punchy. That's far too much risk. Okay. And so that's telling me I have to go aggressive entry technique. So that would be stop loss 780. Reference price would be 790. So 10 points, right, for now would be a two contract play. I still think that we're going to see a little bit of a fake out here lower first, so I'm not in a huge rush to click submit, but I am starting to set up my order execution window. And let's see if we can get that little fake out here first under 780, bounce back above, and then we can look to jump in. If it becomes a very big fake out, right, like we saw in that 3-minute time frame, then that's going to make me change my position sizing, right? So if we exceed effectively 12 points on our stop loss, this will have to turn into a one contract play. Okay, let's see if this is the fake out here. And we're trying to wait for bears to fail or bulls to fail, right, prior to our entry, because what that ensures, right, is that we're not generally going to be early on our thesis, right? So if I enter post bullish failure or post bearish failure, then it makes it a little bit easier for my entry to be green right away or nearly green. And when markets are choppy or indecisive or a little bit slow, then that's a bit of a cheat code because it's effectively like buying insurance, right? If a trade does come together. So let's see. We need to get increasing outlier volume here. We have a good chance for that to happen. And I think realistically, right, because we're at 797 or 798 or whatever it is, we would like to see this candle close above 800 as well, right? Let's use that psychological area as, let's see. So we got 2 points to go. Can it do it? Closed right at 800. It's a little bit sneaky. Okay. And this gives me a really tight risk reward, right? 8 points, 6 points. So again, let's see this thing fail first. 6 times 20, right, is $120 per contract. So I could go three contracts on that potentially. I'm going to see if this thing fails first. Effectively, right, we're trying to see that 800 act as support. And if it moves, guys, without following my rules, I don't care, right? It really doesn't make a difference. I'm never going to hold it against myself that I missed a trade by waiting for it to behave how I expected. That becomes just like a way to torture yourself. It creates a no-win situation, right? You're punishing yourself for being disciplined in trading your system, and that is a very dangerous mindset to adopt. So please don't. We should have zero FOMO if the market moves without following our rules. Okay, let's see. This is our chance for the potential fake out. Okay, so that would be a 797 stop loss for now. Just be a little bit patient though, be a little bit patient. Still don't think we've gotten quite that bounce back we've been looking for, and that's a good thing we waited, right? So again, right? Had we chased that move, had we done something stupid, we would have lost money on this, no doubt about it. So a very good decision there so far, team. And then now, right, our confirmation has been invalidated. Bigger volume, right, than what we got on our confirmation candle. So I can't really view this now as a setup to the upside. This would now be a breakout setup here to the downside. And we'd like to see this close right under that 780 to give me confirmation. Our then target, right, would be low of day or that red line. It's effectively the same thing. So I would just go low of day in that situation. On this 3-min time frame, I did not get a strong enough close. So this would be an opportunity to switch to a different time frame, right, to see if we did get a better confirmation standard. By the looks of it, right, on this 5-min, we did not get it. So then that would push us, right, to potentially waiting for this to set up on the 10, right, which would give us a pretty interesting tradable opportunity. Or, right, we switch back to the shorter time frames and look to see if we can get a strong confirmation. See, Chris, I would not argue that traders are trading very much volume before market data, right? If we look at today's open versus yesterday's open on the shorter time frames, okay, there's my dodgy internet kicking up. Hopefully, no issues here. Fuck's sake. Okay, it looks more stable now. And again, team, right? Just a reminder, we get paid for our decisions, not our time. We've had 10 green days in a row here. If I don't get a trade today, it is not a big deal. I didn't waste my time. I didn't waste my energy. I didn't do all this kind of stuff. I cannot trade with like an entitlement that the market owes me an opportunity. It does not. It does not care. All I can do is wait for price action to give me a square peg into a round hole. It's not going to make me any money. And not every day is going to end up being a trading day. So potentially here on this 10 min, we might get that increasing. It seems maybe a little bit unlikely though. And on this 5 min, we do have a chance. We would need this 5 min though to close under this opening range, right? So under that green box. And we also now need to, right, contextualize the price action that we've seen here so far today. Every move that we've looked at on shorter time frames, 3 min, 5 min, whatever, all those moves have failed, right? So there's very limited evidence to indicate that us being hyper aggressive here is actually going to get us paid because we haven't seen markets behave that way here yet today. So still no reason to deviate away from the fake out technique that we were talking about because all we've seen here so far is pretty choppy price action. Okay, so in this case, right on this 5 min, we'd be targeting our 5 min low, which is way down there. All right, so we're not going to struggle from a risk reward perspective here. And so this for now, right, would be $100 worth of risk per contract. It's another fake out. It's another fake out that isn't behaving as we expect. We're just stacking up evidence here of choppy indecision, right? More so than trending PA or aggressive breakout markets. So we're not going to get paid for being aggressive here, right? We basically need to assume that markets are going to behave like they always have until proven otherwise. And right now, we don't have a proven otherwise to say that we need to be super, super aggressive. So a little bit of a better reaction. Now, this does make it a little bit more complicated, right? Stop loss would be 72. So again, it'd just be a one contract play. Okay. Up more so than elevator downstairs up, right? Like the bounce from, we'll call it 745 to 760 happened much faster than the move from 760 to 745. So for now, I'm still being extremely cautious, or I have very limited evidence that being aggressive is actually going to get me paid. So just still being patient, right? Waiting for price action to exhaust itself. Right? And objectively here, team, right? Every decision we have made here so far has saved us money. Had we taken every trade or every setup that we could have wanted and we did not apply like an element of caution, we'd be down like $1,500 right now. So we've done a really good job here identifying chop and avoiding getting stuck in it. And maybe that's a victory in itself, right? If we're not going to get stuck taking crappy trades, definitely makes it a little bit easier for us to win. And again, right, this would have been a stop out or a near stop out, or at the very least, right, we would have been early on this entry. That's not worth it. Yeah, Shlomo, I know I've got really bad internet. I am trying very hard to give you guys still a stream even with this compromise. I am doing the very best I can. I am hotspotting off of my phone. I am trying to ensure that I can still provide this as best as I can, but there's only so much I can do, guys. Like I'm doing this right now. I am doing it because I want everyone to be able to still learn, but there is a compromise, right? And there's only so much I can do with these tech issues. So I'm trying, guys, right? There are things I would rather be doing than this, right? I don't like trading with crappy internet. It isn't super fun, but don't give me shit for it. I'm doing everything I can to make sure we're all having an opportunity to make money. Okay, I've tried to switch the source here. So if I have a trade, guys, right, that I am in, I will just execute it with my phone, right? I will be able to exit it there. I have 5G. It is just that streaming, right, uses up a lot more internet, a lot more intensity, right? And so there's only so much I can do there. if I were to kill the stream and I were to just be trading independently, I wouldn't be having any internet issues. It is just that I am streaming, right? I am hosting a stream on YouTube where I am consuming 2 megabytes of data a second, almost 3 megabytes of data a second. So there's only so much I can do. And again, we have not missed out on anything, right? It has been a choppy market. It has been a slow day. It has not moved really in any significant context. Every increasing volume candle that has been established has failed. So if I'm being realistic here, right, we're 50 minutes or 48 minutes, right, into the trading day, and I've yet to see any reasonable price action, right, all things considered. So if I were a betting man, right, which I guess I kind of fundamentally am as a trader, the probability of me getting a trade here today now is extremely low, right? Because price action is generally the strongest at the start of the day and at the end of the day. And when you get outside of those windows, or it's a very choppy start, it's very unlikely that you're going to get then like a change of personality at 10:30 and all of a sudden get a monster breakout day, right? Okay, that looks a little bit interesting, right? Just still a low vol pullback here for now. But I would like to see a fake out above that confirmation high, right? So basically see that 800 act as a rejection again. Yeah, we're in our second most profitable position right now, right? It's sitting on cash. Now, with the rate of inflation, maybe that position isn't as profitable as we would like, but I've had no evidence, right, to rush any decisions or rush any trades or to force anything. So, nothing to do, right? I'm just sitting on hands. I'm losing my mind with my internet, but I was probably going to lose my mind at something else anyway. So, may as well make it something that I can't understand or fix. And again, right, we've had 10 green trading days in a row. If on day 11 I miss a trade or I don't get any action, that's a trade-off I will make a billion times out of a billion, right? So it's important to realize that as traders, we get paid for our decisions, not our time. And as much as we all want to place a trade here each and every day, placing no trade is better than placing a losing trade. And of the three or four almost setups, or we'll say setups that gave us confirmation, all of them would have lost us money. So what's the rush, right? Like of all the times I have traveled and traded, this has easily been the worst internet I've had in 6 years, probably, which is ridiculous considering how much I'm paying for this hotel, but it is what it is. So definitely not what I expected when I stayed here. Yeah, unfortunately, these new MacBooks don't have an Ethernet plug-in. That is a bit of a pain in the ass. Like I was looking to try to buy a 5G internet stick or something along those lines that I could just plug in and uh, use, but they wouldn't sell me one without buying a contract, a 2-year contract, which I love you guys, but not enough to sign up for a phone contract in a different country. I also got to say, so I haven't been back in the, oh, it's just an iPhone, but yeah, I wanted to buy like one of just those internet sticks. But yeah, like I'm staying, so I'm like a big Chelsea fan, right? That's the football team I support. And I'm staying at like the hotel at the stadium. And it's a pretty nice place, but holy smokes, man. Their Wi-Fi is 5 megabytes a second. Absolutely infuriating. Well, yeah, I mean, my phone plan, guys, it is good enough, right? To like, I've got an international phone plan. I could use it anywhere in the world. So that's not the problem. I've got 5G on my phone. It's just that it's unreliable hotspotting like that, right? So I am hotspotting off of my phone. I've got high quality enough internet. It's just that hotspotting to then live streaming and doing all this kind of stuff, it is just very data intensive. The other thing that's kind of wild, I haven't been back in England for about a year or so. I was here about this time last year actually as well for like a friend's wedding or their wedding anniversary actually. But man, the internet censorship is so different here or so much more intense than it is in Canada and the US. Um, in my experience, how often do I see choppy days like this? I don't know. I don't know if I think about that too much or like I've ever really tracked that. Um, yeah, I don't know. So like what we're September 30th. I've had 152 trading days or 151 trading days here on the year. I don't know how many eligible trading days are on that span, but there's something like 220 in a year. And we'll say there's maybe, we'll say 60 left before December 31st, give or take. So that means I've missed, as of now, 10 trading days based on holidays or they're just not being action. So it's a very limited percentage, right? Just based off of that. But like, not every day is just going to be a day that gives your strategy an edge, right? Your edge doesn't, or like, isn't sharp every single day. And so that's just a part of it, right? I would say that there are probably more days where I wish I avoided the chop than just like blanket choppy days. All right, so chop is usually a lot easier to identify in hindsight than it is in the moment. which is why like today should be celebrated to a certain extent, right? Because we haven't made any mistakes or obvious mistakes that would have cost us money. But I don't know. I don't like dealing in absolutes like that. Each day is independent, each day is unique, and all I'm looking for is for price action to follow my rules. I tend to not think too much about it. So I would say just choppy trading day, right, would be one where your signals constantly fail, right? Where what would be an indication of um, just like you have breakout setups, those fail. You have reversal setups, those fail. So I would define chop, right, as being market is not behaving how my strategy would say that it should, or it's moving opposite to how I would say that it should. That would really be the way that I define it, right? All market context is within your like based on your strategy, right? So the only way that I see the market, right, is within the confines of my trading rules, right, or my strategy or whatever. So it's choppy relative to that. So when I start to see quote unquote A plus setups fail, right, and all of them are failing, then that's an indication of chop, right? And especially when they fail, right, to basically stop out and then get stuck, right? So if we've looking at price action, like we're just in the we'll say lower half of the opening range, and we've basically been hanging out there for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 of the 11 candles of the day, or 12 candles of the day. And so I'm effectively being told, right, that 80% of the price action that I'm seeing based on my strategy is inside my zone of consolidation, right? That's what that green box tells me. So the idea with the opening range, right, is that we're getting out, or we're getting a breakout away from compression. If we're getting quote unquote breakouts and then reverting back into that compression zone and getting stuck, that just tells me consolidation, right? It's telling me that the market doesn't want to do anything particularly interesting within my strategy context. So it just requires some patience. And if anything, right, at this point, I would be looking for effectively a green, or sorry, red to green reversal, right, where we get a breakout above our opening range high. And then we can maybe clear away from that like indecision zone. But hey, at least price action's giving me a nice little M for Michael. All right. Don't see this pattern too often. So now, if price action ends up spelling my last name, we know we're definitely cooked. But yeah, so kind of just a lot of V's everywhere, not necessarily a lot of oomph. And again, we got a lot of like weird signals so far today, right? Like this 3-min candle at 9:54. That's not after 9:45 data. That's not after the 10 a.m. It's kind of in like the dead zone in between. And that was the biggest volume bar of the day. That's extremely suspicious, right? Because you expect biggest volume to be first candle of the day, or like, one of the last candles of the day. And so for us to get effectively that type of narrative is a little bit suspicious. So I don't think best practice is to skip the first trade of the day or to wait for extra confirmation. I don't think that that's the case. I think um, it's okay. We have known that the market has been bouncy and a little bit indecisive for the last little bit. So we're just waiting to see those fake outs, right? Or we're waiting to see one side fail clearly first, and then we can jump in and play. So it's not like we're looking for extra confirmation or we're trying to delay it or we're trying to do whatever. We're just taking the context that the market has given us and forcing ourselves to slow down. Like fundamentally, guys, chop is just price action that doesn't give you any clean setups, right? That is all it is. So let's not get too hung up on it. It's more a big picture thing, right? It's not an absolute. And like all things considered, we had 2 red days in September. That's it. 2 red days in September. So clearly what we're doing is working. We don't need to force anything. Sounds good, Harv. Enjoy your day, Chris. So yeah, kind of just seems like price is stalling here. Like the thing to realize here, right, is that each trading day is kind of like a little bit of a puzzle. And although it's going to look really similar, right, each one's going to be a little bit different. It's going to have its own little intricacies and all those little details. So that's just a part of it, right? That's a part of the game. We set ourselves up here to be successful, right? Or to not lose money at the very least so far here today because we bought ourselves time, right, with that data, right? So we knew, okay, we got 9:45 data, we got 10 a.m. data. So it's very unlikely that we're going to get a trade within those time frames. Once we start off with that sort of interpretation or that sort of view of price action, you then have 30 minutes, right, to basically gather context, gather evidence, and to see if you're correct, right? But after those, say, two data events, price action still hasn't really given you any consistent narrative or hasn't created a super tradable move. Then you're saying, okay, market's just not super active here this morning. And that's fine, right? That happens. Not a big deal. So let's see if this thing on the 5-min can break out, give me increasing outlier volume. And again, we would need to see this candle close outside or under the green box. And we're going to get increasing, but probably unlikely to get outlier. So without that outlier, right, we're being told that we don't have a change of personality, right? We're at a volume profile where we've seen basically price action remain stuck. So even though it's increasing, it's not an indication of a personality change or as if there's any extra momentum here. So very limited reasons to be aggressive still. Okay, it didn't even close where you wanted it to, so no interest. 10 min, right? It's a rejection, but it's a rejection inside the opening range, so no active setup here. Maybe if this thing did a fake out above high a day, that would be a little bit of a different story, but this is not a setup candle. But yeah, this looks like bullshit. Sorry to curse, but it looks like bullshit. A little bit better on ES. I don't know if I like that it couldn't hold under this. Right, so that to me looks a little bit like just a fake out under low of day, right? Because if those bears were strong, why couldn't they close under that price? That's a little bit suspicious. Looks better on the 5, but it's the same bit of price action we've seen pretty much on every setup, right? Initial move lower and then pretty much instant pullback towards a psychological level, which is that 700 zone. So again, I would need to see some sort of evidence of these bulls failing. I'm not sure if I'm going to get it here. If anything, right, if these bears were strong, why didn't we push lower lows for longer post confirmation? Why is it immediately pulling back, right? That's quite suspicious. So that's what that white line is, right, John? That white line is a 20 period volume moving average. It is just the default, right, and moving average length. So outlier is anything that is above that white line. Increasing is anything that is larger than the previous bar. So increasing an outlier means that we have to be larger than the previous candle and above that white line. A little bit, yeah. It's been I don't know, feels like kind of a little bit of a bullshit trading day here. This just isn't interesting. Both ES and NQ really close to like psych levels, right? ES just under 700, NQ just under 8. I don't know if this is worth taking a stab at. This probably seems to be a market that's maybe more setting up for maybe like a power hour type move. Sounds good, Mike. Enjoy the rest of your day. So you go into your volume indicator, you click settings, style, tick volume MA. Government shutdowns don't really impact markets too much. It's like a story that happens every 14 to 18 months, and it doesn't make a difference. It just means Pelosi's not going to be making as much. She stops getting her good inside info, and her alpha disappears. So doesn't really do anything for us. Markets don't give a shit about U.S. politicians. So yeah, another good decision, right, to avoid this ES. And it's just the same thing, right? We've seen all our setups, right, fail to one direction. So base assumption that this is going to fail until proven otherwise, which is what it did. Yeah, the tariff narrative is over. Markets have digested that news. We're now in a cycle where um, it doesn't make a difference, right? It's markets are too numb to that. We're now in a cycle where interest rate decisions and Fed policy is dictating volatility in the market, not tariff tweets. Yeah, I mean it's just been a story, right? Like you say, it's kind of priced in where it's been I don't know, 8 months, 9 months. Nothing is happening with NQ right now, Chris. So eventually, right, markets just get numb to the same narrative, right? It eventually deals with it. Like, and I think that's, I mean, my theory, right, to why we had a relatively choppy period there in August, because markets went from being tariff driven to being Fed policy driven. And as you get a shift in narratives, right, it creates uncertainty in the market. And once you have that uncertainty, then that's where the indecision comes from. Again, this just looks like it's going to be another fake out. Yep, no active setup, right? Didn't close outside of the opening range. It closed inside our zone of compression. So again, no evidence to indicate that I need to be aggressive here. If I took this trade, I would be breaking a rule. Simply not worth it. The other element here, guys, is I have a hard out in about 10 minutes. If I miss my train, I'll be very, very late. Can't quite do that. So I'm going to go final call for questions here, guys. I'm not going to do anything else. Um, I mean, this is still just a failed breakout, right? So I don't know if I would overthink this. It's not a high vol breakout holding outside of the range. It's just was it one fake out, two fake outs, three fake outs, four fake outs, five fake outs, six fake outs. It's the seventh fake out of the day higher. I don't want anything to do with that price action. Where's the edge? So not going to chase it, right? All these setups are like at this point C plus or better, or C plus or worse, I should say. Sorry. So that's not worth the energy. It's not worth chasing a compromise. It's just going to be expensive. All right. So, any questions here, team? Yeah, tough shit, Morgan. If you can't see my mouse move, nothing I can do about that, man. And guys, I want you to think about how you're phrasing today's trading day, right? Today was a really good trading day. Today was an excellent trading day, right? Because we didn't make any mistakes, we didn't break our rules, we stuck to our structure and our process. Any day we do that is a good trading day. So I don't want you guys to feel like today was a waste of time. We get paid for our decisions, not our time. So please, guys, right? right? Make sure that we're being deliberate with the language that we use to describe our trading. If we're going to put ourselves in situations, okay, any other questions here, team? All right, sweet. So, same deal like always, right? If you have any questions, hit me up outside of market hours. There were a few of you guys who somehow had a call booked here for today. I have sent you a calendar link to reschedule. Do apologize for that, but just while I'm in the UK, it's a little bit challenging for me because I got a lot of responsibilities here just outside of market hours that I normally don't have when I'm back home. So sorry about that. But yeah, hopefully we can find a time for next week. And then, yeah, if you guys have any questions, send me a message. I'll do my best to get back to you as soon as I can. Probably won't be checking my phone here very much this evening because I will be very busy. But I'll do my best to respond to you guys in the morning. And yeah, I'll be back at it again here tomorrow. Same time. Tomorrow will be the last trading day of the week prior to the wedding. And yeah, we'll see how things go. So have yourselves a great day, team, and I'll talk to you tomorrow. Peace.